Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 4th of April, 2023. Yep, that's correct. Yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. Basically, what we do here, just a quick run through the technicals, some of the fundamentals. But yeah, before we do that, guys, let's quickly have a read through our risk disclaimer. So, yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So look, I'll give you a few seconds to read the rest. I'll disappear here for a little bit, and yep, I'll appear a little bit later. Okay, so now then, also just before we jump into the charts, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. You can check out our conditions, our trading conditions. I believe you can find them useful. Excuse me. So yeah, I believe you can find them useful. And yeah, guys, I mean, if you are looking for some, let's say, CPA deals, then yes, get in touch with me or somebody else in the team, and yeah, we can help you out with that one. But yep, if you have any questions, you can always reach out to us, and we can help you with that. Now, look, guys, today's quite an interesting day, so let's jump straight into the charts. I do have a bunch of charts that I want to go through, basically, just some updates, some interesting setups, basically as the standard thing here. Yeah, looking at Nikkei, as always, I pick up on Nikkei the first. So Nikkei 225, look, I talked about it from the technical perspective. I said that, hey, I'm still kind of leaning more towards the upside, but given that we already had quite a decent up move here, maybe a bit of a retracement at some point could be possible. However, not at this point. As I said before, that if we continue to trade above that 78.60% here retracement on the Fibonacci, then yes, I'll go higher. But I think that it's time, and well, actually, I'll go higher, but only up until this 28,393. Ideally, I would like to see a test of this 28,640 or this 28,733. But okay, good enough result here. Let's see if we can actually well, first of all, I'm removing all the Fibonacci, no longer needed, and let's see now what's going to happen with this little hurdle here. So look, in general, the target has been reached, and now we need to kind of have a look at what's going to happen further here, and will we actually clear this barrier? And this barrier, by the way, acted as a very nice area of support. It's the inside swing low here of the 8th of March. So if we do clear it, great. We could go higher. We could go towards that 28,640 zone or even above that. But look, at the moment, the situation is very interesting. I mean, at the moment, yes, the market is kind of in the whole risk-on environment. We are, yes, enjoying the the stocks are rallying. Everything seems to be good and nice. But again, look, the threat of the interest rate hikes is not off the table. So whenever the central banks do increase interest rates, of course, as you all know, this is not very good for the stock market. Now, although some central banks are right now on a slowdown a little bit, let's say they took a pause, like for example RBA, and with that one I'll pick up a little bit later when I'm going to jump into some Australian stuff here. So yep, and yep, the RBA today paused. They kept the interest rate the same as previous, so at 3.6 if I'm not mistaken. Let me just quickly double check that. Yep, 3.6. Look, it's okay. It's giving a bit of breathing space, so maybe, you know, we could see a continuation move higher. However, the fact that the markets right now are kind of going higher, and oil is jumping as well. This is all kind of pushing the Fed maybe even closer to a rate hike. Now, the markets do know that, and the question, why are they rallying in that sense? I mean, if they know that, you know, this is going to happen, as I said yesterday to you, it seems like it's kind of the short-term last dance, you know, so it's kind of before another decline we get. So that's why the markets are rallying right now. I mean, look, Nikkei right now is near this key resistance barrier, and that's why I'm taking a very, very cautious approach. Although I was a little bit more on the bullish side, now I'm taking a cautious approach because, again, let's see how everything's going to continue developing. We do have a bunch of data coming out. Yesterday we had some data, but I'll pick up on that in a bit. So yeah, but coming back to Nikkei situation here, we can see that yes, we approached this area. Now the question here is, can we clear it? If we can, great, I'll go higher, but only up until this territory here, this 28,640 or this 28,733, and I'll take it from there, because what, again, I want to see if this is not going to end up being something like a double top or something like that, you know. But again, let's go slowly on this and not rush into anything. ASX 200. So as I said, yes, the market did have a or the Australian market did get a boost here because of the hold on, the pause on the interest rates. So it's kind of, you know, as I said, gave a bit of breathing space to businesses, to the whole lending system. Again, look, it's great. Yes, short term, fantastic, but will this, you know, remain? Again, the question, like I said, the Fed, how the Fed will perform. So I'll get to the Fed in a bit. But yes, here for the ASX 200, yes, great. Look, from the technical perspective, what I said to you previously in my previous videos, I said that keep an eye on this territory, the 7,245.60 area. Let me just quickly probably highlight that for our future reference. So there we go. Yeah, just a little bit more dark here. Let's do this way, and yeah. So look, this is the area that I was talking about. Okay, great. We got a hold up here initially yesterday, and today we're seeing a nice push higher. This, by the way, what I'm looking at here are the futures. So, you know, you have your cash indices as well. By the way, we also have the cash indices. So, but just because I started off with the futures already, so I just want to stick to that for now. But anyway, looking at the futures here, Australian ASX 200. Look, if we clear this, and I said this yesterday, if we clear this barrier, clear this territory, my next target is the 7,331 right here, and then I'm going to take it from there. Because again, similar story as with Nikkei. Okay, we got a great run, and of course, this, don't get me wrong, the run could continue, but again, we're of course the market is also wary of the situation with the Fed as well. So, you know, they like the fact that they can push the market higher right now, but of course not too much. So now I think that this is where the point where it will be a little bit there will be a little bit maybe more careful, or this is my other scenario, that look, if they know that, for example, the meeting is coming up in May, then maybe they could, you know, just continue boosting everything to the upside until we get that interest rate decision, and let's say that would be another 25 basis point increase, and I'm talking about the Fed, by the way, and then yeah, maybe they could bring the markets down. So at this point, from the technical perspective on ASX 200, I'm leaning towards the upside as long as we can clear this highlighted zone right here between the 7,245 and 60 levels, but then I'm going to target only the 7,331. Now, the Indian Nifty 50. So yeah, look, I mean, I talked about this as well. Previously, I've picked up on this one, not maybe my top expertise here, but hey, from the technical perspective, this is what I was talking about. I said that, hey, if we clear this barrier, the 17,255, I'm going to aim for the upside. I'm going to aim for that 50-day and the 200-day EMA together with this downside line taken from the high of the 2nd of December of last year. So what's happening right now? It seems like we have reached my target. My target is, like I said, here. Now the question, what's going to happen further? Will we actually break this? Downside line and move higher? Well, to be honest, I am gonna. Oh, wrong arrow, guys. Oh, there we go. There we go. Just bear with me one moment. Nope, not this one. This one, the curve. So for me to, let's say, get comfortable, get excited with higher levels. Why is this like that? There we go. So just bear with me one moment, guys. Yeah, where's my arrow? There we go. Perfect. So, for me to, let's say, get much more excited with the upside on Nifty 50, I need to see a break of this downside line and a push above all of the EMAs. So far, we're below all of that. So in a way, there could be another move lower because from the technical perspective, any kind of pullback here, if you're still below a trend line, any pullback could be classed as a temporary correction before another possible leg of, and in this case, selling, because we're still below a downside line. So that's why, yes, that's why I will take a cautious approach here. From the very short-term perspective, I enjoyed the moment that we had this break, and this is what I was saying previously when I picked up on this one. I said that if we break this barrier here, the 17,255, we could go higher, but only up until here. And perfect, mission accomplished. I reached my target. In terms of the downside, I need to see a break of this upside line. Now, again, don't get me wrong, this upside line is a little bit on the tentative side, but yeah, still, I would prefer actually a break of that upside line. Now, let's see, of course, how this is going to play out. I'm keeping an eye on this downside line, and then I'll take it from there. By the way, guys, yesterday I had a technical issue, I think, with the chat here in TradingView. So it was lagging a little bit. So please, if you don't mind, could you just write down good morning or like whatever, so whatever you feel like writing, but hello, good morning or something. I just want to check it out if it's going to be okay, if it's still kind of coming through, live, okay, because like I said yesterday, the chats, the comments started appearing very late in the chat. So yeah, I mean, hopefully it's okay today. But look, Nasdaq 100. So yesterday we got a decline, and yesterday Nasdaq was the loser, the loser from the top three, the Dow, the S&P, and Nasdaq. Yep. So Nasdaq closed in negative territory, but that's okay. Look, I mean, of course, everybody started jumping into financials, into oil-related stocks. So hey, that's logical. Dow, that's why Dow was the best performer. I'll pick up on Dow in a bit. And for now, look, from the technical perspective, again, as I said before, I'm still, it's okay. Leopard Fox 4, it's okay. Fantastic. Okay, great. Thank you very much for that. I really appreciate it. Look, like I said, from the technical perspective right now on Nasdaq, I'm still kind of leaning towards the upside because, again, let's say if I just look at it from the shorter term perspective, maybe this little formation here could be seen as a possible bullish flag. We are holding above that 13,220 territory that I kept on talking about before, because this was my target initially, because I said if we clear this 13,000 and 12,950, I will go higher, and then if we clear this 13,082, I'll clear. If we clear that one, then I'll go towards my 13,220, reach that, even pierce through it, and yes, we're now currently trading above this. Now, I'm going slowly on the slowly higher. I'm not really dragging this one way too much to the upside because, again, okay, ideally, I like this area, the highest point of August of 2022. But the question is, can we reach that? Maybe, yes. No, unfortunately, nobody has the crystal ball, and me too. And that's why I kind of go slowly on this. You know, I don't rush into anything. So for now, at this point, I am targeting this 13,419 zone, approximately around here. That's the well, as you can see here, it acted as a good area of resistance back here on the 8th of August, and also marks the inside swing lows of the 17th and 18th of August, or should I say near the lows of these dates. But again, if that gets cleared, okay, great, we'll go higher, I'll go higher, and there is another obstacle on the way higher here before that 13,740, which I'm kind of keeping an eye on, but well, let's see if that's going to play out or not. But basically, it's this one right here. The no, this is not something that I like. There we go. 13,500 zone, and approximately around there. Now, I do like that one. And let's see if it's if it's gonna get reached or not. So, in other words, I think I can maybe adjust my arrow to this area right here, and actually more of a an area between the two levels. So if we do reach something around here, I'll take it as a success, and I'll be happy about it. And then yeah, that's what I'm gonna I'm gonna be be happy about it. But anyway, look, again, the fear of the rise of interest rates is of course still on the table. Now, by the way, the Fed Watch tool. Look, currently we have shifted towards, now we're getting closer to 60% on the for a rate hike, for a 25 basis point rate hike. Of course, we don't have any 50, but let's see how the market, up until the 3rd of May, let's see how the market will perform. If we have craziness and some sort of, let's say, crazy buying activity, everybody's going to be risk on, in risk on mode. I mean, there could come out some talks about 50%, just basically to calm the market down a little bit. So look, for now, what I'm expecting here is maybe continuation move to the upside, but maybe again not too much, just going slowly. If the market goes way strongly, or let's say if the stock market is strong, there might be, of course, a shift in the CMEs here in the Fed Watch tool towards the 25 basis points. Yeah, we could have a greater one, but maybe even then somebody will start showing up saying, hey, maybe actually let's do a 50 basis point increase, and that could bring, I'm not saying that it would happen. No, it would just be like a release into the market saying, just to calm down the market a little bit, so that it wouldn't be pushing too much to the upside. Because again, I said it before, and everybody knows that as well, of course, that the Fed's main priority right now is to maintain inflation, and the accelerating stock market, and the rising oil is not really something that the Fed at this point wants to see. They don't say it clearly, but hey, the actions speak for themselves. And now, so the big performer yesterday, look, I mean, my arrows even have shifted. So in general, great, mission accomplished for me here. I mean, previously I talked about this barrier, the 32,980, or in general the 33,000 mark. We cleared that one. We moved higher. My next target was the 33,591. We reached that. So yep. Great, and now I can shift this arrow somewhere here. And I said to previously that if we clear this barrier here, the 33,590, I'm going to go higher. Okay, look, ideally, I'm targeting that 34,000 mark. I don't have a line here, but it's just a nice, beautiful number, the 34,000 mark. So yes, that's my next target. If we clear it, then I'm going to be shifting towards this little territory, this little key resistance area near the 34,500 mark. Now, approximately around there. This is what I'm going to be aiming for if we continue to trade above the 33,591. If we somehow fall back below it, well, this is where I will have to do something around here. Let me just adjust a few lines here. Basically, if we start falling back below the 33,591 here, yes, I'm going to start shifting a little bit more to lower levels, but only as a little temporary correction, because still I would actually prefer maybe, where's my line here? I would prefer a drop below this hurdle, the 33,444 or 440, approximately around there. If we do drop below this, then yes, I will aim for the EMAs on my daily chart here, and then we'll take it from there. If we clear that, great, we'll go further south. But at this point, yes, I am just aiming for the upside as long as we stay above the 33,590 territory, which is near the high of the 6th of March, guys. And by the way, yes, that's also the highest point of March, just in case for you to know. Now the German index, DAX. So yeah, look, this one's a little bit tricky again, but still somewhat positive. The Fibonacci's can go away. I need to clear up this chart a little bit. So yep, now we are trading above that 15,700 zone. We're still there. So yeah, the same analysis is valid. Look, I talked about this yesterday. The same analysis is valid. I'm still gonna aim higher. My next target is the psychological 16,000 mark. Yes, I have some higher levels here, but initially I'll target the 16,000 mark as long as we stay above the 15,700. If we fall below it, I need to see a drop somewhere below this little hurdle, this little territory, the 15,500, in order to start shifting lower. Now, what about this area? I'm keeping it just in case the bulls have a late run and they just jump in late and then push the market back up. So that's why I have my downside scenario for somewhere around here. We also have the short-term tentative upside support line here, taken from the low of the 20th of March, which could provide a bit of support even if we do fall back below the 15,700. So yeah, there are a few things here to watch. Like I said, even if we do fall back below this hurdle, but my preferred downside scenario is somewhere from around here, from around that 15,500. Now, again, depends. If it goes, we continue to rally to the upside here, yes, then maybe I'll shift a little bit. Maybe then 15,700 level will become or the area will become more of a downside one for me. So, but again, we adjust as we go. That's the game plan. I don't know, unfortunately, not unfortunately, but that's the situation. Well, with the markets, you always have to adjust all the time. So don't stick to, because sometimes it stops working. So sometimes it stops working when you see that it stopped working. Just draw yourself something new, see if another level works for you. So it's not wrong to do this. So just adjust as we go. The dollar index. So this one is interesting. So yesterday I talked about it, and I said that if we stay, or should I say, because the fact that we broke above the 102.39, I was more bullish. To be honest, I have to admit on this one, I was a little bit more bullish, but this is what happened. We fell back below this hurdle, and look, I talked about this area right here, and I said that if we fall back somewhere below this 102 zone, yes, this could open the door towards lower levels. One of my targets got reached, the 101.55. Great. Mission tick. Then if to be honest, right now at this point, I'm just observing the price action on this one, to be honest, because again, it's for me to go lower on this one, I need to see a drop below the 101.55. I do understand we could be missing out on a bit of territory. In general, I'm cautiously bearish right now. Because again, it broke one of my support levels. I'm cautiously bearish, but I'll get a little bit more bearish if we do fall below the 101.55. Why? Because a forthcoming lower low would be confirmed, and then I will yes, I will go further south a little bit, not too much, towards the 101.26 or even maybe the 100.67. But again, I'll get to that point if we do get a drop below this area. Below this, let me just probably mark it for our future reference. So yeah, oh, not this one, but this one right here. So for the upside, right now this level no longer needed, and I think that I will maybe mark this 102.31 approximately around there. Again, this is a tricky one, don't get me wrong. I'm not saying that this is from where we could start flying to the upside. No. Again, we need to kind of, well, first of all, we need to get rid of this falling channel, no longer needed. Now, like I said, if we do push above this hurdle, I'll get a little bit more excited with the upside. Then I'll target the yesterday's high, or the current highest point of this week, near the 102.75, and then we will go, and if we clear this one, then we could go a little bit to the upside. So yeah, that's the game plan for now. Let's see how this is going to play out. But oh, I can see there in the chat room, Yasil Kirmizi, Euro USD. Look, Euro USD. I'm going to pick up on that one in around here at the end, because I have it. Well, I always talk about it at the end. But yeah, I'll pick up on that one. Don't worry. Look, jumping into gold now very quickly. Gold yesterday, of course, dollar declined, gold pushed higher. We have a crazy situation, and I think what the time for me right now is to remove all the drawings, because whenever something stops working, because I was talking about the 1960 level and it was kind of working for me initially, but then stopped. So I have to, yeah, I have to just kind of start fresh on this one. And I think I need to take a different approach, unfortunately, maybe, but hey, that's the situation here. So look, what do we have here overall? We have a commodity which is trading above all of the EMAs. Okay, great. That could be seen as a positive. We have a commodity that managed to reach the 2010, almost the 2010 territory, and then kind of corrected back to the downside. Okay, that's fine. Could we say that we are in a range? Somewhat. Yes. So we're kind of somewhat in this range between the 1937 and 2010. Okay. But at the same time, actually, I think we're coiling up. I think we're coiling up here, and let me just adjust this. And we're getting into a bit of a squeeze, and something like this could be possible. Now, in general, of course, according to all the TA rules, because the prevailing trend is to the upside before entering the pattern here, then yes, according to all the TA rules, it kind of should break to the upside. However, we have seen this happening in a different way as a few times, so until we get a break, we cannot really do anything here. I would say we're just going to observe the price action. It might just continue, you know, jumping around like this, and if that's the case, look, we do have an eventful week this week. So yesterday we had the ISM numbers, which came out much lower than expected. So that's what gave the stock market a boost a little bit. Yeah, because again, the expectation that the Fed might not go too much, aggressive on the rate hikes. Then with this week, we also are going to have some other data from the U.S. Let me just quickly double check. The ADP non-farm employment numbers coming out on Wednesday, together with the ISM non-manufacturing PMIs. Now this time on Wednesday we'll get the non-manufacturing. Yesterday we had the manufacturing PMIs. Now we're going to get non-manufacturing. So yeah, keep your eyes on that one. A bunch of other data is coming out as well. Look, then of course from China's going to come back on Thursday with the Cajun manufacturing and services PMIs. Keep your eyes on those. U.S. gonna provide us with the initial jobless claims, Canada unemployment rate and IV. And then on Friday, it seems like we are getting the non-farm payrolls again. So yeah, don't be surprised, for example, if gold suddenly starts just moving sideways here up until Friday, and then once the NFP comes out, and then boom, we get a nice pop. Or maybe we'll wait for Thursday, because again, on Friday we have Good Friday before the Catholic Easter. So some markets might be closed. So yep, we'll keep that in mind. So maybe Thursday could be a big mover as well. So just don't be surprised if you see something like that. But yeah, look, at this point, I'm just observing the price action. I need to see a clear push through one of the sides here of this little triangle, and then I'm going to take it from there, guys. So long story short, I am playing the waiting game. I'm cautiously bullish, but I need that confirmation break here through the upper side of this triangle in order to go to the upside. So something like this, basically. For the downside, yes, a break through the lower side of the triangle could be ideal. Now, look, first of all, need to get rid of this Fibonacci, no longer needed. And what I'm going to mark, what I'm going to say here is that at the moment we're still a little bit on the positive side because we're still trading above this upside line, short-term tentative upside support line taken from the low of the 21st of March. But given the fact that we have rallied quite substantially here, guys, I would say be careful. Look, judging by the MACD as well, it seems like we could still have some upside left, but again, we had already quite a decent up move. We need some sort of a stronger correction here to the downside, but until I get a nice, good, strong move below this upside line, and now the more we shift, let's say, to the right and to the upside, the more I'm gonna raise my my downside scenario here from where I'm going to start considering the downside scenario. So look, for the downside, yes, ideally a drop below the 23.30 would be required, but I will already start looking at some lower levels if we do fall below this little hurdle, this little territory support zone between the 23.53, 57, approximately around there, guys, and then we'll take it from there. Oil, so yes, of course, oil. Fibonacci removed, no longer needed, and now I'm getting to the point where which I talked about back in March here, and when we were still back in the beginning of March, I said I'm keeping an eye on this highlighted zone here, very important key resistance barrier. If we can clear it, yes, I will go to the upside, a little bit higher here. But if we struggle with it, then I'm still considering maybe a bit of a retracement here. So keep your eyes on this one. We're currently below the 200-day EMA. So let's see if this area can continue to provide resistance. If it can, a drift back down could be possible. If you're looking for something, let's say, for short term, then keep your eyes on that 79 mark. If we do fall below it, I'm going to consider a larger correction to the downside, because until as long as we remain above the upside support line here, although tentative, as long as we remain above the upside line, I'm going to consider any move, any throwback here as a temporary correction before another possible leg of buying. Litecoin, guys, Litecoin. Let me just drink some tea because, again, my voice is going down a little bit. So, Litecoin still in the range. Look, I'm not going to spend too much time on this one because I talked about it and it looks quite interesting. Could be could be with some good opportunities here, but a clearance of this range is needed. So a break through one of the sides of the range would be required, and not only a break, because I don't want a false breakout here. I need to see the body of the daily candle staying outside of this range, and then I will consider the next short-term directional move. So yep, at this point, that's the game plan. Dogecoin. Okay, talk about Elon Musk. Honestly, this guy is just this guy is just amazing. I mean, okay, if you didn't hear the story, I mean, he changed as an April Fool's Day. He changed Twitter's logo to Shiba Inu dog image. So yeah, Dogecoin rallied on that. So okay, look, once this settles, I'm not surprised if this is gonna go back down a little. Okay, it's quite interesting. But hey, look, at this point, from the technical perspective, I am keeping a close eye on this little hurdle here, the highest point of February, or our previous highest point of this year. So yes, we pierced through it yesterday, but if somehow this 0.10 level, let's round it up here a little bit, 0.10 zone continues to provide resistance, then yes, something like this could be possible, where we could end up moving back to this 0.0920, or even a little bit below that. In general, my ideal scenario in this case would be to get a hold of here near this 0.10 zone, drift back down, test the 0.09 level, 0.0920 level, approximately around here, marked by the inside swing high of the 16th of February, clear that area, move further south, and then end up testing the short-term tentative upside support line taken from the low of the 10th of March. But I just described you my ideal scenario, because unfortunately the market doesn't always give me what I want it to give me. So that's why, okay, I'll keep this scenario for now. But if this territory, if this area right here gets violated and we see the crypto staying above it, my next target then is, of course, the highest point of December of 2022 near the 0.1117. AUDUSD. So yes, of course, yesterday we had some great moves here on AUDUSD. Look at this beautiful move. I talked about this downside line, guys. I said to you yesterday, if we break through it, I'll go higher. What I'm going to aim for, I'm going to aim for that 100, because we will automatically, if we break the downside line, we're automatically already above the 50. So I said that I'm going to aim for the 100 and the 200-day EMA. Boom. Mission accomplished. Great. Wonderful. Now what's next? Now I'm going to take a bit of a conservative approach here, and I'm going to do this. So AUDUSD, this is what I'm going to keep an eye on. And if we do push through the 0.68 territory, approximately around here, if we do push through that 0.68 zone, not even the 0.6794, something like that, no, 0.68 zone, we would be above all of the EMAs and yeah, on my daily chart. And then yes, this could open the door towards some higher levels, and then we could take it from there. So, long story short, I'm cautiously bullish, but I need a confirmation break still. So, as long as we remain here somewhere, look, I am still considering maybe a bit of a retracement here. Again, I said it before, and I will mention this again. Whenever we break a trend line, in this case a downside line, there is a tendency to retest it from the other side and then rebound and push to the upside again. So yeah, that's going to be my scenario here for the upside. For the downside, I need to see a break of this upside line here, and then I will take it from there. AUDNZD, so yes, still in the range. Look, one of my favorite pairs here. I mean, this is just fascinating. I like this pair, and I'm still watching this. Once I get a clearance of one of the sides here of this range, that's when I'm going to start examining the next short-term directional move. I'm just going to leave it here, guys. I talked about this, so at the moment I'm watching the range. I need to see the body of the daily candle staying outside of this, somewhere either above this 1.0786 area, approximately around here, or the below the 1.0675 area, somewhere around here. So approximately around. It's never kind of the exact level, so just kind of keep that in mind. But yeah, I'm watching this. I want to see a clearance through one of them, and I want to see the body of the daily candle staying outside of this range in order to consider the next short-term directional move. AUDJPY, boom, mission accomplished. We tested the downside line. Great. What's next? Now, basically, I'm going to do this. Simple as that. This area here, the 90.23, is something that I'm watching. It's an important area of resistance, could be, because again, previously it acted as support and resistance. Now it's also getting, you see today, for example, we did push higher, but then the pair very quickly drifted back below the downside line. Of course, this could be seen as a little bit of a bearish indication. But for me, the bearishness could come if we do fall back below this little territory, the 88.55. If we do fall back below it, I'll aim for the downside. At this point, I am very careful here. I'm just observing the price action, but if we start clearing that 90.23 here, I'm going to aim for the other downside line taken from the high of the 13th of September of last year, of course. NZDCHF, one of my favorite ones. Looking at this one, and by the way, preparing for the RBNZ interest rate decision, which is going to come out tomorrow morning, or during the Asian morning tomorrow. Yes, yeah, keep that in mind, because again, the expectation right now is for an increase. Let me just, again, for the 25 basis point increase, bringing it from 4.75 to 5. let's wait and see. Let's wait and see if the dollar continues to decline and the interest rates come out as not as RBA, because the RBA kept, if you remember, kept the same rate at 3.6 today. But if RBNZ is going to continue with the increases, then it's going to be interesting. We might see a nice good pop here to the upside. We could clear that 0.5772 territory. If we do that, then yes, I'll go to the upside. And ideally, I'm aiming for that 200-day EMA, but in the meantime, I mean, my next target will be the 100 and then the 200-day EMA. Yeah. Now, if there is no rate increase, look, don't be surprised if we drift back down here. But again, for me, from the technical perspective, I would like to see a break of this upside line taken from the low of the 13th of March of this year. If we clear that one, then yes, I will go a little bit to the downside. NZDUSD, similar story, but this one's a little bit better because again, we cleared the upper side of the range. I talked about this, and great. Look, we are above this 0.6282 zone. I'm leaning towards the upside. My next target is the 0.6390 area, and then I'm going to take it from there. Simple as that. I'm watching this target right now, and this is what I'm going to be aiming for. As long as we stay above the upper side of this broken range, yep, I'm going to aim for that 0.6390. Simple as that. For the downside, now this is where it changes the game plan a little bit, because I'm going to keep an eye on this upside line right here. So this upside line is taken from the low of the 8th of March. So if we do break through it, then yes, I will consider a move lower. USDCHF, just a quick update. Look, this one's becoming really annoying, to be honest, because again, we are sliding lower, we're drifting to the downside, but again, we're struggling with this 0.9125. Yes, we're flirting with it, we're kind of breaking it, giving us these false breakouts, but can we get a stronger one? Because again, I said before that if we do clear this one and we stay below it, then yes, I'll aim for the 0.907060, approximately around here, this territory in between those two levels. So, and then I'll take it from there. For the upside, I need to see a push above this barrier, the 0.92 zone, and then I'll get a little bit more excited with the upside. We could draw this here, and you're not going to be wrong on this one, but still, either way, to be honest, for me, I would prefer to wait for a push above this barrier, the 0.92, because again, if we break the downside line, we could go higher, we could test the 0.92, fail to break it, and then drift back down. I mean, and then kind of continue forming this range, okay, it's not maybe an ideal range here, but something looking like that. USDCAD, guys, very quickly. So there we go, mission accomplished. Boom, reached my target, my 200-day EMA. Because previously I talked about this and I said if we fall below the 1.36 zone here, 36.30, I'll aim, and we fall below the 50-day EMA, I'll aim for the 100. We cleared that one. I said that if we fall below the 1.3537 here and we stay below the 100-day EMA, my next target is the 200-day EMA. Great, reached everything. Now what's next? Well, we had a decent move to the downside, and the fact that, of course, the oil is rising, it's not really helping this pair to move higher, because again, as we know, Canadian economy really depends on the on oil exports, so being a big oil producer and exporter. So yeah, that's what we're getting right now. Some positivity for the Canadian dollar. So yeah, look, if we want to go further south on USDCAD, you need to keep an eye on, of course, on the dollar index and the oil. And if we do, but here, for example, at this point, if we clear and stay below the 200-day EMA, to be honest, that increases the chances for a further move south. What I'm not excluding here as well is that given that we already had quite a decent move lower here and we're currently resting on that 200-day EMA, I'm not excluding, for example, to see a sharp decline, pierce through this, a move lower, but then by the end of the day might come back above this 200-day EMA. And if it's something like that, then maybe a bit of a retracement back to the 100-day EMA here could be possible. So in other words, something like this, keep your eyes on that one. So yeah, if this, like I said, if we continue to trade above that 200-day EMA, then yes, I will consider maybe a bit of a rebound here and a move back to the 100-day EMA, just for like a little retracement. And then I'll draw the Fibonacci's, and then maybe this area will coincide nicely with that 23.6. But again, let's not rush into anything. Let's see if we can, clear that and stay below that 200-day EMA if we can. My next target is somewhere around here. Well, actually, initially it's going to be around here, but yeah, this territory is my next target. USD Mexican peso. So I talked about this yesterday because it was a request. I'll pick up on this one again, and just a quick recap. Look, we are near the key support zone, the 1790 zone, so I need to see a clearance of that one in order to go lower. At this point, I'm just observing the price action. For the upside, I need to see a push above this highlighted territory right here. I know it's a wide one, but look, if I jump into a weekly, it all makes a little bit more sense, because this was a key area of support, as you can see here. Yeah, well, judging from the the historic information that I have here, then yes, we have moved. Well, the peso has strengthened quite significantly, the Mexican peso against the US dollar. So if you want to go higher, then yes, a push back above this territory is required. So I'm gonna, like I said, take a very careful approach here in terms of the upside. If we push back above this territory, we would be placed back above the 50-day EMA, and we could go a little bit to the upside. GBPUSD. So yes, beautiful push higher, great. Look, I talked about this recently as well, and I picked up on this one, and I said, if you want to go to the upside, I'll take a very careful, conservative approach here, and I'll wait for a push above the 1.2444. If we clear that, yes, my next target is the 1.2666. So far, I mean, yesterday we saw a nice, beautiful reversal here, back up, and okay, can we get a clearance of this one? I'm waiting for this one. I'm waiting. I want to see if this is what's going to happen. If we can get that, great. I will go towards that 1.2666. Now, for the downside, I need to see a drop somewhere below this 1.22 territory, approximately around here, guys. And then, yes, I will consider a move lower, because maybe at the same time we could have a drop below the EMAs, and then, yes, we could go towards the lower side of the range. So let's see how this is going to play out. Now, Euro Aussie, jumping into Euro pairs, of course. Australian dollar yesterday pushed higher because gold commodities pushed higher, and we saw this strength kicking in here into Australian dollar against the euro. So basically, what I said to you previously, that look, because it was kind of forming an ascending triangle, then according to all the TA rules, such patterns tend to break to the upside, and we did have a few false breakouts, but we didn't really stay above this 1.6254. So what I'm going to do now is I'm still going to keep an eye on this barrier. We broke the upside line, but again, look, don't really focus too much on it. I would say if we somehow continue to trade below this hurdle, below this 1.6839 zone, which previously acted as a very good area of support, now it could take the role of resistance. If we continue to trade below this little hurdle, yes, I'm going to lean towards a test of the 50-day EMA or even below that. At this point, I will say I'm still careful. Yes, I'm cautious. I'm leaning a little bit more towards the downside, but if this starts pushing back above this 1.6139, I'll take a neutral stand. But if it gets pushed above the 1.6254 and stays above it, I'll get a little bit more excited with the upside. EURNZD, just a very quick update on that one as well. So yes, declined, but still look. Yes, we are below the 1.73 territory right now, but we're kind of, let's see if this is not going to end up being a false breakout, because we had these moves already. Again, let's see if this is not going to be the one again. So if it stays below this, I will aim for the 50-day EMA. If it retraces and stays above this 1.73 territory, maybe we're not really done with the upside. But again, we'll take a very careful approach. cautious one, and then we'll go from there, guys. Maybe even actually, if you're a little bit more on the careful side, maybe you could keep an eye on that 1.74 zone. If we push back above it, then yes, I will start considering some higher levels. Euro GBP very quickly on this one. Look, one of my unfavored pairs, and so far, I said previously that I'm gonna, because I really don't like it, and I really don't like this pair, but I'm gonna have a very simplistic approach on it, and so far it seems like it's working, because what I said that if we fall back below the 100-day EMA here, I'm gonna lean towards the 200-day EMA. Basically, I'm gonna go just purely while we are near the EMAs, while we are kind of oscillating around those EMAs, I'm gonna just go purely from the EMAs, because at this point, look, we fell below the 100-day EMA. We're currently below the 0.8783. It's kind of telling me that, hey, we could go further south. Now, in case this suddenly reverses back up sharply and pushes back above the 100-day EMA, I'll target the 50-day EMA. Simple as that. Because again, this pair has a life of its own, and I don't really always get it right, but so far it seems like one thing that's working for me are the EMAs. So I'm going to stick to those. Once they stop working, I will do something else. Simple as that, guys. But yeah, at the moment, like I said, it's working for me. So what I'm going to do here, I'm going to aim for that 200-day EMA, as long as we stay below the 100-day EMA. And finally, EURUSD. So guys, this one is interesting. Look, I talked about this. I said to you previously that if we fall below the 1.0869, I will lean towards the 1.08 territory, which we managed to reach. And then if that gets cleared, my next target is the 1.0760. Well, that didn't really get, we didn't really stay below it, and we reversed sharply to the upside. Still, either way, guys, honestly, for this one, I am, for the upside, I need to see a push above this 1.0930 territory, approximately around here. If we get that, this will confirm a forthcoming higher high, and I'm going to aim for that 1.1033. Of course, the 1.10 level itself, but the 1.1033 is a little bit more attractive for me. That's the highest point of February, or at the moment, the current highest point of this year. So good potential target. Let's see if we can reach that, but I need a confirmation break first. Until we're here, I'm just kind of observing the price action here. Now, in terms of the downside, well, this is where me gonna be getting a little bit careful again. If we do fall back below the this little, actually no, not really. This is no longer needed. If we do fall below this little territory here, the 1.0846, marked by the inside swing high of the 2nd of April, that's where I'm going to start considering maybe some lower levels, and then we could take it from there. So very simple. But at the moment, we're closer to this barrier, to this 1.0930. If we can clear it, great. I will go to the upside. So yeah, guys, that's it for this session. I'll have to wrap it up here. Thank you very much for joining in and watching this one till the end. I really appreciate, guys, your views, your likes, your comments, everything. So really, really appreciate that. So thank you very much. If you want to catch me tomorrow morning, as always, at my daily pitch international, 6 o'clock GMT time. For now, have a beautiful trading day. Have your stop losses in place. Risk only what you can afford to lose, and everything will be fine. So thank you very much, guys, and I'll see you tomorrow. Bye-bye. Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video, we speculate your next mouse movement will be towards the subscribe button.